Hi, it's Larry Gaines, PowerCycleTrading.com. Well, in trading comes down to price direction, timing, and risk management. And then from risk management, that brings in hedging. So, when I'm looking at trades, I'm always thinking of a kind of a backstop, a way out. So if something goes wrong, what can we do? And so that brings in hedging. So that can be a number of different things. But for hedging, the best thing to do is use options. That's what options were actually designed for hedging. So here's an example. So this is Western Digital. So we look at Western Digital. It's in a really tight, nice volatility squeeze here, and we've got our momentum indicators down here, cycle 1 and 2. This gives us potential direction as to the direction of this potentially breaking out. So right now the probability is this could break to the upside, but we're coming into a long weekend, which will be Monday, will be a holiday. So we've got, basically 3 days that the market will be sitting flat potentially, no price action, but during that period of time, there's what we call theta decay, time decay. So that's something that we can also hedge for. The other thing we can hedge for is potential directional risk. If this tends to stall out and come down, we've got this virus scare going on, so anything can happen there. So a lot of reasons that we can look then to hedge to reduce the trade's risk and also to reduce theta decay, but at the same time, giving us the potential for a big reward if we're patient enough and if it just kind of stabilizes and then moves. So this number one looks like a good pattern for a breakout to the upside. You look at the longer term chart on Western Digital, and it's had this nice starting to bottom, this rounded bottom here on the monthly, you can see, and it's up into this 50% retracement, and that's kind of where it's stalling right now. So that could be another thing that could pull this thing back. So we did a setup here today where we started out this trade as a call debit spread, but then was thinking, okay, we're going to get into a long weekend, so let's just reduce a little bit of the risk a little bit. And so I'll show you how that was structured. So we're looking for an upside move of around maybe $4 or higher. So we bought today, we started the trade out by the 28 February series. So 2 weeks out, bought the 71.74 call debit spread, paid 98 cents or $98. So we've got a risk of this already defined, 98 bucks with potential profit of 202. So, 2 to 1 risk reward, not bad. But then the market started to kind of, more headlines and stuff about the virus, etc. And then we've got a holiday on Monday. So you can see this has a theta decay of $1.74 per day. So if we come into, let's put our calendar here to Tuesday when the market reopens and the market hasn't traded, but the price is exactly the same when we come in on Tuesday, look at what's going to happen to the potential profit. This is going to be down $17 just on even no movement on price. So that's something that we can hedge for. So how do we hedge for that? Well, we can sell time, and we can sell volatility. So what we did was we sold the vertical credit spread down here, the 28th February. We sold the 74.77. We sold here, let me get this blown out a little bit. We sold the 75 right here, 75.77 bear call credit spread, brought in $27 credit. Okay, so that then reduces down the debit spread side to a risk now of only $71. But the bigger impact is we reduced our theta decay here. So now it's still negative, but it's slightly negative, only 50 cents or 54 cents. So we come into next week and the price hasn't moved. On Tuesday, we're only down $3. Okay, so a huge difference. So this is hedging. This is how you can defend your trades from theta decay, from price direction, and buy yourself some time. Now, if this goes out, our max profit on this actually can be $229 at expiration, and that's on a risk of 71. So that's the potential for a huge return. So in that scenario, that would be a return of 322% return on our capital at risk of 71. So if you'd like to learn more about these strategies, we'll be covering this in greater detail this Saturday at a kind of a live free workshop that I'll be doing on butterflies and condors like this. So join us this Saturday. Use the link here on the email, and hopefully I'll see you there.